figures out today show that your revenues increased 12.9% and basic earnings per share up 9.6%. Variables at play?
Tough market, a lot of competition. We've spent the last 2 years building our brands, working on the quality and working on our marketing plans. And in the last 6 months, it paid off. We increased market share across all brands, and was very pleasing to note the increase of Africa as a share of our business.
Well, obviously the environment is getting a lot more exciting because you've got through the industrial policy action plan of the government, emphasis on local content. Does that inform how you operate?
We run a factory down at Pinetown where we assemble about 30% of the products that we sell, and any initiative of government is supported. In looking at the SADC opportunity, local manufacture does help us, and we are starting to develop products now specifically for the African continent.
Obviously you distribute a lot of your products through retailers, and there's big talk now of Walmart coming in, shaking up the retail space. The one concern about a big giant like Walmart is that their distribution channels and their suppliers are largely sourced in Asia and China, and there's a fear that this market's going to be flooded by Asian electronic goods. Are you concerned?
There always are concerns. I think you've got to look at, first of all, as the African continent, and there's a lot of cheap goods coming into the African continent, Chinese cheap goods, right bottom end stuff. That is an opportunity for us because we like to target a little bit further up in the market. The quality of the goods is a lot better, the reliability is a lot better, and as you know, with Africa, the distances to travel to get items repaired. So we think if we can work very closely with Walmart, from the supply chain, from the logistics, there's a major opportunity for us and for local manufacture.
I mean, obviously procurement is a big issue if we're trying to grow the manufacturing space in South Africa. To what extent do you also source a lot of your products from China, and to what extent are you going to really make a concerted effort to lift the figures from 30% local manufacturing to something a lot higher so that we improve on local procurement?
The way to do it and the way we're tackling it is looking at products that are specific for Africa. So gas-related cookers, ethanol-related cookers, those sorts of products where we can design and manufacture in South Africa. Where necessary, we would work with Chinese manufacturers to increase the distribution worldwide and make us even more competitive.
Are you concerned about the threat of looming inflation? Because although retail sales figures are up, we're told that by late this year, consumers would be a little more reticent to spend.
Look, we're really concerned by inflation. If you look at the administered prices and the effect on the consumer, it's quite substantial. For people to buy our products, you've got to look at their purchasing basket, and electricity prices, school fee increases, petrol price increases, potential taxes on the road. It's quite substantial. So we think there's a major inflation rate at the moment and not what is reported for the consumer that buys our products.
And your outlook for Africa, because you're quite excited and bullish, and your Africa strategy basically evolved about 2 years ago?
We see it's a major opportunity. What we're seeing is the market starting to open. We're seeing that the tariffs are coming down, barriers of entry are slowly moving away. Movement of goods, rail infrastructure, road infrastructure, all of that slowly being put into place. If you go into some of the African countries, you see all the telecommunications companies, the banks are there, the financial system's improving. So these are creating opportunities for us. And we are just going in and putting into our place our infrastructure, supporting the products, and hopefully the benefits will be there.
What's your strategy just by way of improving on distribution networks in Africa? You're obviously going through the retailers, as I said earlier on, but at some point you must be looking at local manufacturing cycles.
What we're doing is we're talking to the local retailers in each of the countries, and we're asking for their requirements. What is on their shopping list, not just from a product, but from a services, and what do they expect from us? Who do they want us to deal with? How do they want us to interact with those people and with the country? And we're picking up that information and just slowly putting those pieces into place.
Which are the hotspots for you? Because everybody's excited about Nigeria.
Yeah, and we are too. And we consider it in what you do in each country. You've got to be very careful about it, and you've got to actually understand the culture and not be perceived as arrogant. So we decided to take it very slowly, move one step at a time, look at the countries closer to us, Mozambique, Tanzania, Zambia, Zimbabwe. So we looked at those countries first, learned some lessons, understood it, and we will tackle Nigeria in the next 3 months.
Are you concerned about things like currency risk, for instance, because you produce also quite a bit of stuff from South Africa, you import a bit more from out of the country. The rand is strong right now, it plays in your favor, but that's not necessarily going to be the situation later on. And when you're operating in some of these economies, Zimbabwe is a dollarized economy, you've then got to factor in those differentials.
You know, the rules keep on changing of the game, right? And you know, as a business person, you're faced with those issues, and you've got to deal with those issues. You've got to change the nature of your organisation. You've got to change the structure. You have to be flexible. You know, Walmart coming into the country, some of the rules are going to change, and if you don't adapt, you know, your company won't be there. So you've got to understand what the consumer wants, and adapt and meet the consumer requirements. That's what it's all about.
Talking about how the rules are going to change, certainly there was a very controversial issue concerning one of your brands, Tedelex, and that's interventions made by the Johannesburg High Court late 2010. We're told that Tedelex was accused of passing off some of their goods as locally made, whereas in fact they were made in China, and those were infringements on copyright law. Have you overcome that particular bad patch in your history? What did the court say?
Okay, that really wasn't a bad patch. We had an arrangement where we branded certain products that were made locally with the company. That company decided to cut us out of the chain and go directly to the retail trade. We then manufactured our own product, and we did source product from China as well to complement our own product, to make sure that we supply a full chain of products. The High Court made no ruling at all, and so there was no outcome to the case.
So you're not worried about sort of perceptions of that particular brand, PR issues,
no,
and
no, no. In that,
integrity?
In that product, there is no copyright on that product.